A strategic meeting between leaders, C-levels, and decision makers. Italia GRI 2026 brought together the leading players from the Italian real estate market to debate the future of the sector.
Another takeaway is the spread out of several asset classes where to invest, not only focus office or retail like 10 years ago, but we have hospitality and retail on the podium, but we have also student housing, logistic, and started the residential to be an asset class for institutional investor. Regarding the asset class, we are the beginning of the cycle, especially push for the presentation of the Piano Casa by the government. And I think that is a good opportunity for the sector.
In terms of locations, there is a strong view on resort destinations in Italy's shores, and also fast-growing opportunity are Alpine hotels, although of course it is difficult to source the product since the number of keys traditionally in Alpine hotels is somewhat below of what investors are looking for.
Gathered in Milan, the country's financial engine and a hub for business and innovation, the meeting was an exclusive opportunity for high-level discussions, interactive roundtables, qualified debates shaping real estate investment.
We discussed about the interest from investors, both across the private and public space. In particular, private owners like family offices want to own this type of iconic trophy assets in Italy. We discussed about the challenges of delivering these assets, given the ability and the complexities of navigating planning and development. We discussed pricing and the premium that ultra-luxury can attract when the product is delivered correctly. We are very excited about the outlook for this sector and obviously very keen to engage with operators, investors and clients over the long term.
2026 prospects are very positive, so mainly shopping centers are operating very, very well. So there's a huge a growing investor interest, and right now of many foreign capital, so that's really interesting. Regarding high street, what we see is that luxury retailers are struggling a bit, so concentrating more the units and not spreading so much across the country. But yes, retail is crazy, booming, and I think it will be a very good year in 2026 for retail investment for sure.
The concept of equation fits quite well into the current context. There are many variables that are changing. It is clear the market is moving from build to sell to build to rent, but still there are so many things moving on and changing, coming from macroeconomic environment, demographic trends, interest rates, construction cost, demand, affordability, a lot of things that needs to be put into the formula to find the right equation and to find the result of that equation.
Held in May, Italia GRI 2026 put the sector's most pressing topics on the agenda: the macroeconomic scenario, investors' risk appetite, best opportunities, asset repricing, ESG regulations and targets, credit dynamics.
The possibility to create and generate new pipeline of grade A building in the city center of, say, the main markets in Italy, which are Milan and Rome, are very limited. The demand of a tenant is very high, and this is driving a big increase in the current ERV in the market. It's pretty impossible to find good quality space in the city center now, as it's not easy to find product to be adapted to the new concept of office, doing a value-add strategy.
Regarding Milan and Rome, today are the main focus from investors, and there are a lot of opportunities, in particular in Rome, because you got a premium, but still lack of products in the market. That is still an important topic to be taken into account when underwriting, while exit cap rate and prime RV or rental growth, generally speaking, even in secondary location that have been, I would say, historically stable, reach very important RV in the end.
We still see build-to-rent, flex living and senior living struggling a bit to capture the interest of the market for several reasons. One, for sure, are cultural limit of the people, despite the good demographic trends that could support this asset class. And then the second very interesting key takeaway is that when it comes to this asset class, investors are more and more willing to be exposed to the operational risk.
A full day of networking, opportunities, and businesses, contributing to the evolution of the Italian real estate market.
Alternative lenders looking more and more to the Italian market, substantially across almost all asset classes, in almost all of situations. Income-producing properties, value-added transactions, development, special situation, and across virtually all asset classes. So there is a good sign that alternative lenders are here to stay. They are relaxing underwriting criteria and also venturing into lower ticket size.
It's been interesting to hear from the panelists, to hear the question from the audience, and I think there is a common view that today Italy, together with Spain, so Southern European markets are now one of the core markets in Europe, so it's becoming definitely attractive for investors, and it's not anymore a geography that needs to be explained.